I happen to be a kick-ass accountant.
And that was the first time I went to prison. Oh, hi. Hey, everybody, I'm Ryan. Welcome to the accounting 240 course pack walkthrough of assignment problem 610. Let's go to town. Okay, this is kind of a fun narrative. I'm surprised there are any fun narratives in this entire course pack, but this one is one of those. So why don't we read through it together a little bit? I'll do a little bit of a setup. I want to scroll down here and take a look at what the required is. I love to do this before I do the question. Calculate Willie's minimum net income for tax purposes. We are looking for NITP for the 2021 tax year. We want to ignore sales tax. We want to ignore leap years because it makes our lives easy. If you look over to the left, you can see I've set up a tidy little template for this. It is quite similar to the solution that you have access to. This is what I'm going to be walking through. So I will, as I read through the narrative of this problem, I will periodically fill in the information on the template, the problem. And I think we've got a lot of interesting stuff here. I think we're going to, like, when we're doing net income, I think at this point, we can do employment income. We're aware of that type of income. We know taxable capital gains, and we have property income. So we can add up all those various, we've got three types of income at this point. We can kind of deal with a more realistic taxpayer situation that you might see in real life. So it was late in the evening of April 29th, 2022, when Slick Willie Ketchum returned to his office. The recent recession had caused an increase in crime, and because of this, the bounty hunting business was booming. I guess he's a bounty hunter. Willie threw his wrinkled suit jacket over his chair and sat down. Willie knew his 2021 tax return was due tomorrow, but he didn't have the energy to complete the form. Wow. Thirsty business, bounty hunting. It's a dangerous profession.
Bounty hunting is a complicated profession. Don't you agree?
2021 had been an interesting year for Willie. He had left his job as a postal clerk in Regina, Saskatchewan on March 31st and moved to Langford, British Columbia. His job in Regina paid him $9,000. I assume that is his salary, and his employer had deducted $100 worth of CPP, $150 for EI, and $2,000 for income tax. Because of the number of people leaving Saskatchewan, he packed up and moved. Why are so many people leaving Saskatchewan? The move to Langford proved to be a turning point for the Ketchums. There's more than one Ketchum? All right. Willie got a job with Bobby's Bounty Hunting and Collectibles, which is a public company, on April 15th. And Sarita, who is Willie's wife, started with PricewaterhouseCoopers, chartered professional accountants, on April the 15th as a CPA articling student. So far, there's not that much information I can use here, right? But this is what you would sort of encounter if you met a real person in real life. You get a lot of background, which you'd need to know, and then you would dig into the actual numbers and do the tax return. Willie proved to have quite the knack for bounty hunting. In 2021, he brought in 45 known felons. Do we have that many felons in BC? His employer, Bobby, was so happy with the performance, he provided Willie a company car on May the 1st and paid for all operating costs. Sounds like we've got a standby charge here, buddy. Company car was a 2016 Ford purchased by BBH. BBH, yes, at a cost of $11,000. Operating costs in 2021 were $4,700. Willie drove the car 35,000 kilometers from May 1st to December 31st, of which $20,000 for personal use, meaning 15,000 would have been used for employment purposes. An unforeseen need for cash forced Willie to sell 1,000 shares of Air Canada that he owned. The ACB equals about $17 per share. That's what he paid for him on November 21st for $20 a share. Immediately after he received a $2 per share eligible dividend. Yeah, right. Willie knew these items would have some impact on his income, but he was not sure how. Willie sounds like a friggin' genius. Hey, he's out busy. He's bounty hunting. He doesn't have time to worry about taxes, which is what we're here to help him with. Yeah. BBH paid Willie a gross salary of $52,000. From this, the company deducted $400 CPP, $500 EI, $9,500 income tax, and $2,800 RPP, and $150 for group term life insurance. BBH matched Willie's RPP contribution. The total cost of Willie's $150,000 group term life insurance coverage was $650. Bounty hunting requires significant travel away from the municipality. Willie spent $6,200 on hotels and $3,800 for meals while traveling in business. BBH did not reimburse Willie for any travel costs. Okay, meaning he can probably deduct some of these. I don't know. In addition to a prosperous year of bounty hunting, Willie's investments provided a good return in 2021. He received $3,800 worth of interest, of which $900 was accrued in the prior year. Interesting. So we have money and we have income. So we'll have to deal with those two things. Cool. Okay. As stated, we want his net income for tax purposes. So why don't we go ahead and jump into the template that I've set up here, and we're just going to wander through. So let's start out here. First up, the numbers that I think were interesting as we walk through. Well, let's slowly, actually, I'm going to jump back over. So let's walk through our narrative and pick out some interesting numbers. So let's walk through our narrative and pick out some interesting numbers. So first up, we've got the job in Regina. Now we're gonna deal with this guy's employment income. He's gonna have employment income. We know he's got some investments. He's gonna have investment income, and then he's also got, I believe, some taxable capital gains in that he disposed of some shares of his company. So I'm gonna read through and I'm gonna start looking for numbers. And the first number I see is the job in Regina paid him $9,000. I assume that's gross. Right, and his employer then deducted $100 for CPP, $150 for EI, and $2,000 for income tax. Okay, only one of those numbers is interesting, and that is the salary number. And the reason for that being, oopsies, and the reason for that, of course, is that an individual who is an employee is taxed on their gross net income, not their net income. So it's the gross salary. An individual employee is taxed on their gross salary, not their net salary. So we need the gross. CPP is not a deduction. EI is not a deduction. $2,000 income tax. Income tax is not deductible for tax purposes, right? It's just an estimate, right? That has been paid throughout the year, and it'll ultimately reduce the amount of taxes that he has owing based on his gross salary. So the gross salary is what I include, and then I move ahead. La-di-da-di-da-di-da. When does it get interesting again? It goes in and talks about some of the benefits that he's receiving in addition to the salary that he receives from his job in Langford. So the salary is $52,000. I might as well go ahead and put that in here right now. That is gross salary once again. So I'm going to dump that in right here. And let's deal with some of these benefits. So first up, we have, okay. He's provided with an automobile. If he's provided with an automobile, then there's going to be some sort of standby charge associated with that. We know that the car was purchased, so we're going to include the purchase price here. We know that because it's purchased, the rate that we're going to be using is 2%, and we're going to times that by the number of months that the car was available to Bobby. Because he got the car on May 1st, there's 8 months left in the year, including the month of May, so we're going to multiply that out by 8 months. Now you might want to ask yourself, look, is there a standby charge reduction available here? To which I would point you to note 1, and note 1 says there is no standby charge reduction. The car is driven more personally than for employment. If you drive the car more for personal purposes than you do for employment purposes, you are ineligible for that potential reduction, which is sad, but hey, you got away with driving the car personally. So if we do the calculation here, 11,000 times 2% times 8 months, we got a standby charge benefit that we're including in income, taxable benefit, taxable benefit of $1,760. Now we've got an operating cost benefit here for the year. Whatever year you're watching this in, the operating cost benefit rate may change. It's a prescribed rate on a year-to-year basis. For this year, we're using 28 cents. Any prescribed rate like this would be provided to you during an exam. 28 cents, 27 cents, 26 cents. It kind of fluctuates, based on the cost of living, and it's changes every year, but usually not by more than a penny. So we've got an operating cost benefit here. The operating cost benefit is based strictly on the number of personal kilometers used by that rate. And so we multiply those two things out. We have $5,600 like so. You might want to, okay, so this is going back over here. We have 11,000 cost for 4,700. So operating cost being $4,700. That's something that we might want to talk about as well. So operating costs incurred for the car are not something that are potentially deductible because the operating cost benefit is an amount, because the car is not owned by Willie here. The car is owned by the company. So if irrespective of the amount of operating costs that the company has to pay for this car, right, the company is paying it. That has nothing to do with what Willie is going to include on his tax return. The operating cost benefit is based on personal kilometers driven, not actual costs incurred by the employer. So the benefit is shown there. The total benefit that's included in income for our man here is 7,000 change. We're going to continue on from there. So if we jump back over to our narrative, we have a little bit of information. What else do we have information about? Company car, blah, 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 blah. Let's see what's next. Unforeseen need for cash force. Willie to sell 1,000 shares of Air Canada. Okay, this guy sells some shares. Big deal. I'll go down and deal with the capital gains here. He sold 1,000 shares and the shares cost him 17 bucks. He sold them for 20 bucks. And so he's going to, that's a $3 difference. So that's $3 capital gain per share times 1,000. And we're going to multiply that out by 50% because that's the taxable component. So we have $1,500. Jumping back over, let's see what else we have that we want to contend with. There's BBH paying Willie a gross salary of $52,000. So I've already input that. From this, the company deducted $400 of CPP. Okay, so we have to ask ourselves every time the company is making a deduction, who's paying that? So the company is remitting $400 of CPP on behalf of our friend Willie here. $400 of CPP. That is an amount that Willie technically pays, right? Willie gets a gross salary and then $400 of that is withheld and paid by the employer. It is not deductible from his income though, right? It is not deductible from his income. Ultimately, the amounts paid in CPP will show up as a non-refundable tax credit, but that's for later. So CPP, $400, we don't do anything with. EI, we don't do anything with. It's a similar situation. And $9,500 in income tax. Again, remember, this is not deductible. We need to include gross salary. They also deducted $2,800 in registered pension plan. Now, when I say they deducted, they withheld this from his salary, right? So over the course of the year, they would have been some payroll withholdings on a biweekly basis, however often he's being paid. And effectively, what happens here is Willie himself, out of his $56,000, is paying $2,800. This actually is a deductible expense. It is one of the few deductions that is permitted. So we are going to make that as a deduction. Remember, anytime we see a tax number, we're looking at, okay, is it taxable, is it deductible, or does it have no effect on taxes? There's only three possibilities. And in this case, this is one of the limited deductions that employees can deduct from their employment income. Cool. So we've got the 2,800, 150 bucks for group term life insurance. So this was withheld from his paycheck, meaning he actually, this is his money, $150 he contributes towards life insurance. So again, you ask yourself, when an employee has paid money, is it deductible? Contributions towards life insurance premiums are not deductible. It also goes on to talk about BBH matching Willie's registered pension plan contribution. So first up, the registered pension plan contribution by the employer is what we call a non-taxable benefit. So it is not going to be included in income. That I believe is indicated in note 4. So if you take a look at note 4, employee contribution deductible, employer contribution non-taxable benefit. And then let's get into that life insurance. The total cost of Willie's $150,000 group insurance coverage was $650, of which he paid for $150. The employer then contributed an additional $500. When your employer pays for life insurance premiums, right, the component that they pay, that is considered a taxable benefit. So we are going to include that amount in income. Life insurance premiums never deductible for the employee, and always any amount that the employer contributes is taxable to the employee. So you can see in note 3, Willie paid 150 of this and the employer paid 500. $500 is a taxable benefit. The 150 is not deductible. Let's see what else we've got here. Bounty hunting requires significant travel away from the municipality. I would imagine so. Willie spent $6,200 on hotels and $3,800 for meals while traveling on business-related purposes. So as he's an employee, he was, he's incurring these expenses while outside of the municipality. Therefore, they're potentially deductible expenses. So we've got our hotel costs, we've got our meal costs. We're going to dump those in here. Now, the meal cost is 50% of the costs that are actually incurred are deductible for tax purposes. Why not the whole thing? Because he probably enjoyed eating the meals, and meals are never 100% tax deductible. So we've got hotels, meals, we add up the total on those things. That's it for employment income. As far as I know, let me just make sure there's nothing else. In addition to a prosperous year, bounty hunting, Willie's investment. So the next piece is investments. So we'll total up our employment income here. Employment income total is $57,960. Next, we're going to move to our final little bit, which is the investments. So a good return in 2021. He received $3,800 of interest, of which $900 was accrued last year. Okay, so if $900 was accrued last year, that means it's not going to be, it was included in income last year. This guy received $3,800 worth of income. Some of that was accrued. So the correlation between what this guy received and what's actually income is off, right? He would have received $3,800, but $900 was already included in income in the prior year. So it's going to be the net of those two numbers, 3,800 minus 900. That is ultimately going to be what is included in his income this year, because that $900 was included last year. So we've got 29. And then I guess there's an eligible dividend. Where did I miss out on that? Oh, if you scroll back up, he received a $2 per share dividend. That's sneaky. I love that. I love it so much. It's sneaky, and I kind of glossed over it. So $2 per share dividend. There's 1,000 shares. So he got the dividend before he sold. So you take the $2. It's an eligible dividend. Times it by the number of shares. Gross it up by 1.38. That'll give us our amount of income in relation to the dividends. Now I believe we can total everything up. And our net income for tax purposes for Slick Willie, after all of that, $65,120. Solid, huh? I mean, that's not a bad living, I suppose. Maybe you should take up bounty hunting. Is accounting not right for you? Maybe bounty hunting is right for you. I don't know. It's good for Boba Fett. He's a bounty hunter. All right. That's it. Take a seat.
But I want them alive. No disintegrations.
As you wish.
Thanks for watching my video. Did you like it? If you did, press the like button. Did you find it helpful? Well, there are plenty more videos right up here. If you really found it helpful and you want to be updated on all the latest videos, why not hit subscribe? Right over there. All right, everyone. See you next time.